Hello and welcome to Surf Stop with me, Agam Vakil, on Bloomberg, Quint, and as usual, we're here to get a perspective and ideas on the futures and options space in Indian equities. Now, the Nifty 50 index may have come within striking distance to reclaim 9,000 for the first time in over 2 years last week, but for now, it seems traders will have to wait for the level. With most accumulation in its call option open interest, 9,000 continues to offer stiff resistance, and in fact, the Nifty has once again slowly started to dwindle downwards. There is little change in the volatility, which continues to trade near 7-month lows, and there is little respite yet for traders placing bets on either direction. But considering all the events that have been lined up in India and globally, will indices break out of their current range or continue to consolidate? And if there is a sharp move, will it break out above crucial levels, or will markets see a correction? Let's find out. Joining us today and guiding us through these days of open interest this week is Sameet Chavan, Chief Analyst of Technical and Derivatives at Angel Broking. Hi Sameet, and thank you for joining us. And with that, I'm going to ask my first question, which will of course have to do with the Nifty. We've seen a lot of consolidation, but are you expecting the Nifty to finally move out of this current range that it has been stuck in?
Yeah, we've already seen a spectacular rally in last couple of months from the lower levels of 7,900. So Nifty has already rallied more than 1,000 points in a couple of months. And it has now reached its psychological level, which is the 9,000 mark. Thus, we are seeing some consolidation since last couple of weeks. But it's a matter of time looking at the overall technical chart structure as well as the FIR data. We expect Nifty to surpass this hurdle quite soon. In fact, we expect Nifty to hit new all-time high quite soon. So any intra-week, intraday dip is likely to be bought into. On the low side now, 8,800, 8,850 seems to be a very strong support. So we would continue with our optimistic stance, and traders are advised to use dips to create fresh longs in the market.
No, but based on what you've told us for your expectations on Nifty, what you're asking your clients to do if they were to have a point of view of the next week, would you ask them to sell options? Would you ask them to hold on to whatever bets they have and maybe not move forward? How would you ask them to move or go about in the coming week?
See, it depends purely on the client's risk appetite. Is willing to take higher risk, then they can trade in Nifty futures. No, they can buy, they can hold on to their existing longs at current level, keeping a strict stop loss below 8,800. And in that case, we expect Nifty to surpass 9,000 and can move towards say 9,100, 9,120 mark. So risk reward would be quite favorable at current level. But if one wants to take a moderate risk, then they can buy at the money call options, which is the 8,900, and they can hold on to it for a target of 9,120, 9,150 on Nifty.
And are you expecting the same when it comes to the Nifty Bank Index as well?
Yes, in fact, banking index is the one space that has been outperforming of late. Yesterday also we saw decent recovery in the market that was mainly led by the banking counters. So yes, we are quite optimistic on Bank Nifty as well. 2,400, 2,300 seems to be a very strong support. We have already advised our clients to buy 21,000 call. So one can buy at current level, keeping a strict stop loss around 20,400 on Bank Nifty. And sooner or later, we expect Bank Nifty to move towards 21,200, 21,300.
Right, Sameet. So what would you ask your clients to do when it comes to stock futures or stock options then?
Yeah, as far as stocks idea is concerned, we are quite optimistic on Bajaj Auto. Last week, clearly we witnessed a breakout from its near-term range. However, since last 3-4 days, it's been just consolidating. So we would maintain our optimistic stance on Bajaj Auto. So one can buy at current level in future segment. Stop loss would be around 27.48, and our immediate target would be around 30.30. Apart from that, we are quite optimistic on PSU banking counters. So one can buy SBI at current level, keeping a stop loss somewhere around 264 in future segment, and we expect SBI to move towards 282, 284 over the next few trading sessions.
All right then, coming down to Derivatives 101, and once again I want to remind our audiences that we are open and inviting questions for our guests. And the question for this week, Sameet, is that we have Raman Shah asking, what is a protective put?
Basically, protective put is a risk management strategy that investors generally do to guard against the loss of unrealized gains. Put option acts like an insurance policy. So it costs money, which reduces the investment potential gains. Suppose if you bought a particular share, 100 shares of XYZ company, so against that, you can buy at the money put option to hedge your underlying. So in that case, if underlying moves higher, in that case, your overall notional gains would be your cost price minus the current price, and in that case, you might lose some money in put premium. But if this particular trade goes against your direction, in that case, you can earn money in put option, and probably you can keep a protective stop loss in your underlying asset.
Well, there you have it, Raman, your explanation for a protective put. But that is all that we have on Surf's Up. Thank you, Sameet, once again for joining us and simplifying some of that data for our audiences. And as for you guys, do come back next week and join us for yet another edition of Surf's Up, only on Bloomberg Quint.